So, welcome everyone. Thank you for coming along today. It's nice to be back in person, which is a good thing. So, as Oscar says, we've got some interesting things to talk about today about the kind of the commercials around game studios setting up. And what we thought we would do is we would run through a scenario and pick up the different life stages through the life cycle of a business. I'm delighted to be joined by Felix and Neil. And one of the themes of our discussion today is around the connections you make, the contacts, and how your network's really important. And in bringing this together, I called upon my network. So funnily enough, 18 years ago, I started just across the way there at BDO as a trainee, and I met a guy called Neil, who was an accountant, audit trainee as well. And at the same time, I met a chap called Steve, who can't be here today, who has introduced me to a chap called Felix. So from those contacts that I made 18 years ago, I'm still using that. I'm still talking to people today that I knew all the way back then, and they're still really important in the things I'm doing, and hopefully at some point I'm helping you guys as well. So on that note, if I would ask Neil to introduce yourself, and to break the ice, he's going to tell us what game he's most looking forward to in 2023.
Thank you, Gareth. So I'm Neil. Like Gareth said, trained at BDO, firm of accountants, great place to work. Learned a lot there. Was there for about 9 years, decided to do something different, and went and worked for a huge global business with 65,000 employees. Was there for a while. You don't really get to experience the breadth of work that I wanted at a big business like that. So back in 2016, I decided to do something different and went to work for an SME, about 25 people, Dreams over in Farnborough, a video game developer and publisher. Loved it, loved working in a smaller business, getting my hands dirty, learned a huge amount, was there for 5.5 years, grew the business with the team from about 25 people up to over 100. Now working for another VR developer and publisher, Emergent Entertainment, 2 studios, Maze Theory and Emergent Games. So, it's good. I wouldn't go back to working in the big world of corporates. SMEs, video games, it's a lovely combination. Game for 2023. I think it's going to have to be Zelda Tears of the Kingdom. When I played Zelda Breath of the Wild a number of years ago, I was just blown away. Even after playing games for 30 odd years, there were things in that game that made the hairs on the back of my neck stand up. It was incredible. So yeah, that's highly anticipated.
Brilliant, and slightly showing your age, because Zelda obviously coming through when you were a young lad. So Felix, similarly, could you tell us a bit about yourself?
So hey everyone, I'm Felix. I've been a lawyer for over 12 years. And I've had the privilege of working in-house in various senior legal roles in studios across the industry. My personal highlight is I was general counsel on the exec team at Mediatonic, the Fall Guys developer. So really supporting the founders and the studio on that journey, the pivot from work for hire to original IP, the absolute insanity that was Fall Guys, and the kind of the rocket ship that was, and of course through the corporate processes to the eventual sale of Mediatonic to Epic Games. So that was incredible experience professionally, hugely rewarding in terms of development. And my passion has always been helping entrepreneurial teams start up, scale up, and go beyond. And that's what I do full time now, just for studios in the games industry. And so I'm an advisor on demand, a lawyer on Slack. I advise studios on both legal and non-legal aspects. It could be their business and strategy. And I do that through a business firm called Level Up.
Brilliant, thank you. So you can see why we selected Neil and Felix to join us today. And just to give you a little bit more about my background. So I'm a director at BDO. Principally I work in tax, and so I do lots of good stuff with people on video games tax relief, R&D and structuring and everything else in between. So in terms of what we're looking at today, we're going, as I said, to run through a scenario and pick up those different stages of the life cycle Now, we could talk for hours. Indeed, in our prep, we have spoken for hours. So we will obviously be keeping to time today, but we appreciate that we won't hit everything that people might be interested in, and we'll each of us be around for the rest of the day, so do come and find us, ask us questions, happy to talk about some other things. What we've tried to do is make this life cycle point relevant, as I say, to our scenario, but it does affect people in all sorts of size of business. So hopefully you'll pick some things out that you go, well, that is still relevant to me, even though I might not be in that particular scenario. So what I've got is a couple of my friends and I have got an idea. We're pretty comfortable having gone through university and worked on gaming things, that we've got this brilliant opportunity to build out a game. But we've never done anything before on the business front, and we're just wet behind the ears. So we're comfortable that we'll get the product right. But Neil, what else do I need to think about at this stage? What's key from your perspective?
So as a bunch of developers, you're probably amazing at making games, whatever your specialism is, whether you're an engineer or an artist, or you focus on design. You've got that nailed, so there's not a worry there. But there are all kinds of other business admin things that you need to think about, which might not come to you naturally because that's not your background and not your training. So whilst it will cost some money, you might want to outsource some of those bits and pieces to the experts. So bookkeeping, there might be payroll, there might be HR advisory. I think at this stage it's really important that you get decent employment contracts drafted, templated for you to use moving forward as you look to grow the business, if that's what you intend to do. You might want to have a part-time or full-time in-house operational person who is a bit of a generalist, can do some of those things I talked about, so the basics of bookkeeping, running an office if you have an office, all of those things which are non-development specific, because there are all kinds of things that you need to think about. VAT returns, filing your annual accounts, having numbers for on a monthly basis so you can see where you're spending your money and whether you're spending the right amount of money. So yeah, you probably want to have a think about whether some external help there, even a few hours a week, might help you.
I think that's a really encouraging thing to be aware of, is that you can get those small bits of help where you need them. You don't need a fully fledged back office team at this stage. There are people out there who can help with the bits you do need. And I think we all know at this stage of development we're going to be a bit hand to mouth. There'll be some things we have to fly by the seat of our pants on and kind of accept.
So on the point about external help, I think a lot of developers will have come from other studios, so it's typically a new studio will come from a different studio, and they tend to grow out in that way. So you will know people who work in the industry already. You will have made contacts at events like this, and you will have a group of people who you can reach out to and ask them for advice to get referrals. So I would nearly always use an advisor that's been referred to me by somebody that I know, because they're tried and tested. So really do make use of your network of contacts when you're looking to bring anyone on board.
Yeah. I think that's great advice. And as I say, today's testament to that, because we've all come together by being recommended to one another at different points. So Felix, from your point of view, Neil sort of touched upon some of the regulatory compliance needs that come with setting up a studio, setting up a business. What does that look like from your world?
Yeah. I guess the most important point at this stage of a business is not to over-egg on the compliance and the business function, because cash will be absolutely key at this stage, and it's the focus is on the product and the game and the idea. And so it's very important to, as Neil and Gareth say, to hit some of these basics, but there's no point having the gold-plated, best-in-class, business back-end if your actual game and prototype, or whatever, is suffering because of that distraction. So it's very much, the focus should be overwhelmingly be on your game and your strategy. But also, I guess, taking a step back, it's about the founders coming together and really aligning on the company vision and the strategy. So yes, you've probably got great ideas and you've aligned on the game and the genre and the monetization model and the art style, all that kind of stuff. But probably even more important than that is for founders to agree on what type of business are we creating here? Is this going to be a multi-game studio? Is this going to be a lifestyle business? Or do we want to be the next, like Tim Sweeney and Epic Games? Those are very different propositions. And so you want to align expectations between the founders on who's contributing what, and then trying to come to some understanding around that. So it could be, you don't necessarily have to have a shareholders agreement or founders agreement, but having some kind of written kind of memo of, okay, this is what everyone's pitching in, this is the strategy, and so people are on the same page.
Yeah, I think that's a great point, because we see it not just in the games industry, but all over the place with our clients and people we bump across, where people fall out later on because they haven't got that set at the outset. And you can still diverge and you can still have your own views, but having that idea up front is really helpful, I think.
Yeah, things change. Life events happen. So 5 years on from when you set up the business and you had a shared vision of the future, it might be one of the founders has had a family, and things will change. So having something outlining what the business is doing up front is really useful.
Brilliant. And I think the message that's coming through from both of you here is that every penny counts at this stage. And so you've got to really think about where you're spending your money. And I think the bit from my perspective here is that there's loads of grants, reliefs, incentives available, not just gaming specific, there's plenty that is, but understanding what's available to you to make that seed fund go that bit further and get you that bit further along, and maybe get you that bit of help that you otherwise wouldn't have had. So that would be the bit for me that, just to add on to what you're saying, is that bit of finding those things that can help you.
I would definitely, at an early stage, look into VGTR. It's such a lifeline to the games industry. So effectively, if you don't know anything about it, for every £1 you spend on developing a game, you will get 20p paid back to you by HMRC. So it's massively helpful. It's money into your bank account after the end of your financial year. So make sure that you've taken some advice on it. It might cost you a little bit. There are individuals who are not that expensive. Look into it early. Make sure you've got your structuring set up correctly and everything in place so that you're unlocking the capability of claiming it down the line. We're not talking small numbers here.
Yeah, I think that's a really good point as well, which is getting it right sets you fair. And actually, that's kind of what we're talking about with a lot of these things, is if you put that early work in, you will get things right and you will then be set in a really good way to go forward. And VGTR is one of those things that is changing. The consultation closed yesterday. Things are going to move on that. So that point of using advisors is a really important one, because you need the most up-to-date kind of thing. And like you say, it doesn't have to cost the earth. So, okay, we've gone through all of that. We've built our prototype. It's looking pretty good. We're pleased with it, and some publishers are interested. And in fact, we've been offered a potential publishing deal for our game, which is hugely exciting. So, Felix, what do? Do I just sign up and get cracking, or is there something more to think about?
Yeah, so obviously the legal claxons are going off in my head. So at first, celebrate that win, especially if you're a first-time studio. Having a publishing term sheet, even though it's not signed yet, that's huge. So make sure you do break out a bit of champagne there. But before you sign it, of course, I think publishers, they come in many different flavours, and so some of them are generally very developer friendly, and what you have in front of you, could be absolutely fine to sign. But there are lots of nuances to publishing agreements now, particularly in games. So I guess one important point to note here is make sure you get quality advice from someone who actually gets the games industry because we're at a point now where it's a very sophisticated industry, and there are lots of terms of art and specific concepts that you as a founder should really understand when you work through that publishing agreement. Don't just rely on your advisor. Read through it and make sure you understand these points. And just to make it a bit more substantive, it's things like, what about porting rights to the game? What about sequel rights to the game? The publisher says you own the IP, but if they've got contractual rights over how that IP is used, that is effectively not a huge difference between owning the IP or not. Other things such as, do you really understand the royalty mechanic in the publishing agreement? That can come in many forms. There's recruitment rights that the publisher has. So make sure you really get under the skin of all those points, and if you're not sure, as Neil says, there's so much advice out there that it's easy to get on demand.
The definition of net revenue is a good one as well.
Oh yeah, classic. Yeah.
Look through that carefully and make sure you're not giving too much away there.
Yeah, and the sneaky one that often comes in, coming back to VGTR, is that you won't be the one keeping it, and I think that's your point around some of those net revenue things, and actually, depending who your publisher is, they might say, well, actually, we're taking that, and then you'll be left in a different position. So on that point, Neil, I think it's a good opportunity to turn to the idea of, we've got all those legal things, and we've thought that through. We've picked our battles. We've got a good solid thing. But is it going to make me any money?
Maybe. So you celebrated with your champagne or your beer or whatever you drink. Really exciting, and then you need to go away and sit down and look at the deal properly in terms of the financials. So you might be a bit like a moth attracted to the light because it's all exciting and it's your first opportunity of getting a deal done. But you need to go away and work out, well, what is this going to cost us internally in reality? And generally, you would do that in a video game studio by looking at resource months. So I need this many people for this many months making the game. The average cost, or the cost per person, if you know it, is this. Okay, it's a 300 resource month project, say. Okay, but then there's external costs as well. So we have some expertise in-house, but we're quite small still, so we need to bring in quite a lot of outsourcing expertise. For example, we don't have an audio manager. We know nothing about sound. There will be QA. If you're releasing the game overseas, there might be localization costs, depending on how many territories you're releasing into. So you need to go away and you need to build all of those costs up and see how that looks versus what you're being paid by the publisher, and make sure that return is suitable. Ideally, you're not just covering the costs of doing the work, you're making a margin, and you might set a target margin at 30%, 40%, I don't know, it will vary, but if you've got other costs apart from your core development team, you want to be making sure that you're covering some of those overheads. If you've got an office space, there will be significant license costs for the software you're using. So, yeah, you need to go away and do your numbers. That might lead to some back and forth with the publisher. There will be a negotiation process whereby the amount they're paying you might change, or you might have to go back and recut your resourcing plan to do it for fewer resource months, or change the plan so that you have some less senior hires and replace them with more senior hires. That's important, and it's also important to look at it on a cash flow basis. So drawing up a profit and loss is one thing, but that doesn't reflect the timing of when you're receiving the money. So you might have milestones where you can receive money from the publisher, but those might be quite different from when you raise the invoice. You might raise the invoice for your £100,000 or whatever it is, milestone payment, and due to the review process at the publisher, and then a 30-day or 45-day payment terms, you might not be receiving that money for 2 months after you've raised the invoice. So you should probably pull together a cash flow basis as well.
Yeah, I think just one of the things Felix mentioned about was potentially dealing with some overseas matters. You might also have tax withheld, and that's another timing matter. So it's a brilliant point that you could have a P&L that looks terrifically healthy, but you run out of money on month 4.
Yeah, and I was just going to echo the milestone schedule, which is, this is the place in the legal document where it sets out these cash flow points of, okay, you hit certain builds, and that, if approved by the publisher, will unlock the next payment. And so getting that right up front, and it will change over time, but having, making sure you're, fully confident and that's as robust as you can get it, on day one is really, really key. And, thinking about, can you negotiate more of an upfront payment? So it's something to ease the cash flow. So you get, a percentage of the overall funds, up front, just so you've got a bit of buffer. And those, the terms around, as Neil have said, around, publisher review times, and is there anything around publisher delays? What happens then if, in the best, most people are fine, but, sometimes just because of things outside of everyone's control, there are delays. And what happens in that scenario if you've sent a build and you're just waiting for a publisher approval? And a final point from me on this is also the termination rights, which everyone hates discussing because everyone, it's a downside scenario and everyone's trying to think about the upside and the dream. But it does happen, and particularly we've seen, sadly, the recent, macroeconomics and the headlines and the layoffs. Projects do get cancelled by publishers, and you need to think about what if that happens. And so, it's quite normal for publishers to have rights to walk away mid-project, but you need to understand how they work and how they would impact your business cash flow if that happened. Do you get, for example, a payment of the milestone for the current one and the next one, just to tide you over? All those nuances are definitely worth paying attention to.
Yeah, the final thing I would add on publishing agreements is don't underestimate how long it will take to get it over the line. You don't want to build a milestone, your first milestone, into your cash flow a month out, because these things can take months and months and months, depending on who you're working with, particularly if it's a big publisher with a big legal team. These things can take 3 to 6 months.
It's a really good point, because the bigger you get, the slower you move with those things, and it has to go through all of those different levels of review. It's often right. Okay, so that's brilliant advice. Our next step in our scenario is that we've got all of that sorted out, we've had a release and it's gone really well. So we've come through the difficult startup phase. Our game's gone out, it's been critically acclaimed. I've paid back all of my seed funders with that margin that I built in because I took Neil's advice. Now I want to go for my next games, and I've got grand plans, but I've got no money. So, Neil, what do I do to show my credibility? My game acumen is there. I've shown that to the world. How do I now attract that next level of finance to get me to do the next things that me and my colleagues want to do?
So on the next round of funding, you will have people looking into the details of your business more closely. They will be doing some diligence. So you need to have a really robust financial model, a proper financial model, probably looking out 3 years. You need to have a 3-statement financial model. So balance sheet, cash flow, and income statement that all work together. Probably in Excel, not necessarily, but it seems to be what most people use. And it needs to stand up to people who know what they're doing with finance, looking through it, and the assumptions in there need to be sensible. Anybody can put in there that they're going to sell 100 million units, but is that going to stand up to some probing by people looking into it? Is your headcount increase commensurate with the title you want to do? So can 10 people make this title? No, that would require 40 people to make that title, given its scale and scope. So yeah, a good financial model. You might have somebody in-house who can do that. It might be the case that you might need to get a consultant in to help you with it, or you might need to bring someone in full-time, another role, because given where we started, you might not have somebody who can code in Excel to the right level. Then you want to be DD ready, due diligence ready. So if you can have all your files in really good order, robust monthly management accounts, have all your legal contracts in the right place, anything you've been doing on the company secretarial side is all up to date and filed away sensibly, you will be asked for all kinds of information when the accountants or the lawyers come in as part of this round, and you want to have it to hand if you can.
Yeah, and so that's a good segue actually into, Felix, the kind of thing you'd be looking at, because it's a great point there where you know, if your finances stand up to scrutiny, that's brilliant, but you've got to have all of your house in order at this stage. It sounds like I'm going to have some horrible people trying to check whether what I'm saying is credible. So Felix, in your experience, what does that look like?
Yeah. So as Neil says, you have lots of people hired by the investor to look under the hood of the company, and they're really just making sure that there aren't any red flags, so that if they're putting X million into your business, that's not going out the other side because there's some hidden liability that you've not disclosed. So they're going to be poking around pretty hard, and it's really it's a spectrum, right? So you get investment from, you know, your seed stage, angel stage, and at this stage we're probably talking about VC or maybe even private equity fund money. But the bigger the check size, naturally the more scrutiny you're going to be put under, and it's important, really important, to be investment ready, and it's kind of what Neil was saying about making sure all your ducks in a row. And if you can, you know, have that in mind even before you get to the investment stage, it will be 1,000 times easier, because, you know, sadly I think we've probably seen it too many times where it's a bit of a last minute job where, you know, suddenly they have to go back in, I don't know, 10 years of company history and dig out documents that have been lost or scanned. And what you want to do is preempt all those investor questions, because the last thing you want is the investor raising a point and you becoming aware of it at the same time. You either want to get ahead of it, so you've dealt with it, you've knocked it on the head so it doesn't even come up as a red flag, or at least if it does come up, you've got a story to tell. You know, you can say why it's not actually a big issue, it's not going to impact the valuation. So it's all about being ready, and prevention better than cure.
One thing to think about is this will be a whole load of work, so it will be a distraction to the core business. You probably do want somebody in who's going to be responsible for handling all of the queries, getting the information. Founders can do it, and I've seen that in the past where I've worked, but it will distract them from their day job, and it could derail the development of the game if one of the founders is a key developer in the title.
That point's excellent, because it's got to be done with a view to it being really positive, not taking away from the things you've got to do. And question for both of you really is, you talked about finding out what your gremlins are and getting in front of them. Do you, in your experience, have you seen much around people using vendor due diligence to put as part of the investor pack? You talk about being investor ready.
Yeah. It definitely happens. It's about kind of what's proportionate, I guess. And as you get to these bigger rounds, then maybe it is worth hiring, you know, a bigger team of advisors to do basically your own due diligence process thoroughly to preempt what the investor will do. But you can, it's not binary, right? Because you can engage advisors who just do like a lighter health check, or, you know, a finance audit or a legal audit. It doesn't have to be this 100-page, 6-figure report that is, you know, eye-watering. It can just be, okay, what are the key red flags that, you know, we should preempt at this stage, and then getting advice and knocking those on the head.
Brilliant. I think the other thing at this stage, when you're thinking about your investor, and you touched on investors come in lots of different guises, and, you know, you could be having angel investors, you could be looking at institutional investors, and it's thinking about what they will be interested in. And one thing that we regularly see, and again I'd be interested in your views, is the thing around EIS, CDIS, and making sure that you are as attractive to an investor as you can be. So Neil, I don't know if you've had to deal with that in your time?
Yeah, I've worked on EIS before. For anyone in the audience who isn't aware, there are tax beneficial ways that people can invest into companies. So if somebody invests money into a company which is EIS compliant and has the right certification, they will get some tax breaks, whereas if they invest into a company that doesn't have it, it will not be so good for them. Yes, I've dealt with it. It makes your investment offering much more attractive to people. We've spoken with lots of individuals who walked away when they found out that they weren't able to get EIS. It's a question that a lot of people ask. High net worth individuals, for example, will tend to, it'll be one of the first things they ask, is this an EIS opportunity?
Just drawing on a point you made around different flavours of investors, and I think this applies to publishers as well, is that you should always do some reverse DD, reverse due diligence, and get some intel on who you're going to be partnering up with. And it's even more critical for an investor, because a publisher is for a project. An investor, you are literally getting in bed with them basically, and they'll be with you pretty much for the full life cycle of the company. So you really want to make sure that that investor is the right fit for you, and particularly the personalities is normally a principal at that investor who will be working with you more day to day, and making sure they're the right fit. Because again, we see things where that's sadly doesn't quite work out, and it can be quite painful down the line.
I think the fit is really, really important. And then that's secondary to that. Somebody who gets your business and the industry and has a network in your industry and can open doors for you. If you can get somebody that you can work with well and they have the second part too, fantastic.
Yeah. They're often called angels for a reason, aren't they? Because they do deliver quite remarkable things for you. So we're focusing on the positives. So let's say we found that right investor, and we're going now nicely through our scale up, and actually the business is starting to mature. So we've got, say, we started off with our 2 or 3 people. We've now got 50 or so people. We've got 30 requisitions out because we've got all these terrific projects that we're going to work on. Starting to feel like we're getting a bit serious now, and I'm having to be a grown-up, and I still feel like that guy who was sat in my bedroom with my mates chatting about a game. I don't know what to do. I'm feeling a bit lost. So I guess both of you, from what you were talking about in your bios, have sort of lived through this bit of a business. So it'd be great, Neil, maybe if we start with you. What's your experience of that, and kind of being the person who came in at that point?
Well, I can see a number of my ex-End Dreams colleagues still at the back of the room. Hello. These are all people who were brought on board for their expertise at a point in time. So when I started, we were a very small team, and over time as we grew, we had to bring in certain specialisms, so people who really knew what they were doing in their field. So this stage, the scale-up stage, is about getting out of startup scrappy mode and becoming a proper business with people who know what they're doing in their own fields, moving away from generalists who can do a bit of everything, jack of all trades, and getting people on board who really know what they're doing in their own areas. Anything else on that one? Obviously at that point you're growing the team. It's going to cost you more money, for sure, but you need to be credible. You need to look like a really slick machine. Yes, we're in games, but we still got to run a proper business here. It's really important that when somebody is looking in at you from the outside, they think you know what you're doing, and hopefully you do know what you're doing.
And I think that's the point at which some of that professionalism, if you like, with professionals comes expectations of, you started to allude to this idea of not just paying people properly, but having, for example, proper benefits packages and things that look like that you'd expect a business in the industry to have. So, Felix, from your perspective on the legal commercials piece, you've lived this. You went, as you said, from being an advisor to an in-house person. I'm guessing that was part of professionalising that business.
Yeah, exactly. So I joined Mediatonic in 2019, December, and Four Guys came out in August 2020, and obviously we had no idea what was about to happen. But I joined at this kind of scale-up stage, right, where in the business it just closed like a huge funding round at the beginning of the year. It had multiple work-for-hire projects on the go. It had original IP concepting, underway. It was also in negotiation for a bunch of other projects. Then had a publishing division that was starting to kick off. It was the regular corporation doing lots of indie publishing. And so there was a lot going on. And so I think that's why they started bringing in people like myself to help deal with some of the the other business issues. So legal or HR, etc., finance. And I guess from my own point of view, I kind of kind of approached all this in three lenses, I guess. One was, as a lawyer, as a pure lawyer, how was I going to protect the value of the business? And that comes down to compliance and making sure you're starting to knock on the head some of these issues that have been at the back of your mind, but they've not been a priority because the business has had to focus on the product and fundraising, things like your GDPR compliance and privacy and that type of thing. But then the second lens was, okay, how can I add value as a business advisor? And that was, how can I improve the commercial deals of some of these publishing arrangements or some of these work-for-hire contracts? Can we, where we're doing more of a role on the project, can we get a royalty share out of those contracts, something like that? And then the third lens was more, I guess, strategic, in that at this stage, your senior team, everyone should really have one eye on the corporate vision and the strategy. And for Mediatonic, it had a private equity backer, and so no surprises, an exit was on the horizon at some point. And so people need to be thinking about, okay, everything I do, that should, how does that slot into this kind of strategic context? And looking around that corner and trying to preempt problems that could arise, not just on the legal front, but just from a general business front. So so as a founders, at this stage, it's really about, looking ahead, kicking the tires on the roadmap and the strategy, and now you have the time and the resource to invest in fixing some of these other issues that may have been on the back burner for a while.
I think that point is a really interesting one, which is we accepted early on that there was a core set of things we needed to really focus on and let some things drift. Now we're getting to the point where there's lots of big, scary things that we can't let drift anymore because they could bite us. And Neil, you were going to say...
I was just going to touch on the point that Felix made. He said something like, the things that I do. You need to be really clear within your team who is responsible for what. Because as you've grown, bigger team, people doing lots of different things, you don't want anything slipping between the cracks. So sit down and work out between yourselves who is responsible and accountable for what. Really important.
And I guess this is the point at which you will also be looking externally more for assistance, because some of the things you're dealing with, where you had those initial leg ups, these are the sorts of things where there are people who are just absolute experts and they can add really value as well.
Yeah, and I think that's there's a whole piece around org design at this stage, which it's definitely worth thinking about, because if you're at a stage of the scale up now where you've outgrown this kind of very small kind of founding team where as a founder you can micromanage pretty much everything, but if you're at the kind of 50 to 100 size studio, now you need to be thinking about, okay, how can I delegate? Where as a founder cannot be over every part of this business. So do you need to bring on like a COO, for example, or someone to handle more of the operational side of things? Do you need someone to, head up HR, a chief people officer, something along those lines? Because, culture is so important to game studios, right? And so, when you get to that kind of bigger scale-up stage, there's a risk that you become a bit too corporate, or especially when this environment of remote work, you start to lose the magic when you're all kind of in a room together working on that one game. So there's lots of things to think about there.
Yeah, that's a fascinating point, isn't it? Because we talked earlier on about aligning the founders' views and getting those things ready. This is where the strength of that comes through, because that's your core, that's where your culture comes from. Keeping that alive with all of these new headaches, that's quite the challenge of moving from that scale up through to being a mature, kind of grown-up business.
Yeah, so in my current role, I started March 22. Was looking after finance and IT, HR, or people. And one of the first things I identified was I need to get a decent people and culture manager in, because this isn't my bag. I'm not an expert on employment regulations or on shaping the culture, learning and development. So yeah, come July last year, we had a people and culture manager start, and the impact she's had has been incredible. Amazing hire, really happy. So yeah, you make sure you have a good team supporting you who know their stuff.
Brilliant. So again, we're focusing on the positives. We've got that. We've got a really stable, well-established business that's delivering terrific content, and we've got all of these people in place to help us. But we want to realise some of that value as founders, right? And there are lots of different ways you can do that. And coming back to your point earlier about our ultimate aim was a trade sale. We wanted this to go on to another business. We didn't want to list it. We don't want to go over to institutional investors on the larger scale. So unsurprisingly, we've never sold a business before. So Felix, help. What do I do now?
Yeah, so I guess in terms of corporate milestones, this sale event, whether it's trade sale or to someone else, this is like your big boss moment, right? In terms of the
End game.
Yeah, exactly. Yeah, what you have to accomplish.
If you die, you don't get another go.
Right. So I guess thinking with that analogy, slightly cringy one in mind. It's about building the right team. Have you got the right party members? Do you have the right support? Because there's going to be a lot on when you go through an exit process like this. And you basically, as founders, will be doing two jobs. You'll be running the main business, and also you'll be having this kind of separate kind of life where you're speaking to all these corporate financiers and advisors and buyers and suitors, and you're making sure that you've got people you trust to run the core business while you get on with all those conversations is absolutely key. And as those other investment rounds or the publishing agreements, those were kind of like side quests. You were kind of leveling up the studio and yourself and picking up those skills. And so making sure that you're, putting some of the points we've mentioned where, you're preparing, you've always had one eye on this event, that puts you in a really good position to make sure it goes as smoothly as possible, because there'll be a lot going on.
And much like the big boss moment is that point, isn't it? That this is the one that is harder than the other things. It is bigger. It takes on more significance. And so, Neil, I guess we talked about being investor ready in the kind of the due diligence world there. I'm guessing it's just an amplified version of that with a lot more stress.
Yeah. You really need to be organised for this one and know your stuff, know your numbers. Have a finance person who just has the numbers in their back pocket, can answer any questions. They understand them inside out, because they will be asking some tricky questions about your forecasts. You're going to be looking out 3 to 5 years at this point, and they need to be sound and supportable numbers. You need to show whatever that the investor is looking for. You need to be able to show that is the case. So they will probably be looking for some strong growth there. And you need to be able to show a model that is showing growth, but be able to explain why and how that is realistic and you're going to achieve it.
Yeah. And so at this stage, am I just going to waltz off into the sunset and retire and I'm done? Is that likely?
Probably not, no. Typically, you will be locked into some kind of earn-out period. So because you were so critical to setting up the business, and you're probably really key to running it still, they will look to possibly keep you in the business for a number of months, years, and some of the consideration that you're being paid will not be unlocked until you've hit certain targets, achieved certain milestones, been there a certain number of months. That's an earn-out clause. So it ties you into the business long enough that they can take over the running of it and make sure it's as they expected, it's hitting the forecasts that you said it was going to do. Nothing nasty coming out of the woodwork, and it's a sustainable business that they can run going forward when you do actually move on.
And that's kind of the protection mechanism of the due diligence, isn't it? We look for everything we can find, we present the best case we can, but your buyer will want to protect themselves yet further. So if you're still there in the nicest possible way, you're still there to be accountable for it.
Right, and it's the structure of these exits can really impact the psychology and the dynamics, because if you have I've just been thinking about in the height of the pandemic, we know lots of acquisitions took place in the game sector, and many of them will probably have this type of earnout structure where the founders were tied in for 3, 5, maybe even more years, and they had to hit certain targets before they unlocked some of the price of the company. But we've seen that kind of, the macro climate has taken a big hit, and sadly, the stock prices of some of these games companies have come down, and that will have a knock-on effect on these private valuations as well. And that means that probably lots of these earnouts are what we call they're potentially underwater, where actually they can't actually hit those targets, and so that could have an impact on how incentivized and the founders are to stay in. So there's lots of these structures out there, and when you're thinking about when you get to this stage, which is obviously a beautiful one, make sure you again get the right advisors, because there's lots of kind of scenarios to run through.
Yeah, and that story you've just told sort of resonates, not on a gaming transaction I've worked on, but we work on transactions quite a lot, and the question we always try and sort of ask our clients is, okay, the dream scenario is obviously the one you want, but if it goes wrong, are you still incentivized enough? And often people will put themselves too much in the equity and the jam tomorrow, but you've got to make sure you get something now and an ongoing piece that is realistic. So yeah, I think that's a really important point.
Right. And a lot of these deals we've heard about, these huge like Scandinavian companies in particular, that there's sweet gobbling up businesses left, right, centre, and they seem to be closing at least a year ago a transaction every other day. And part of the pricing structure in those exits, they were giving shares in their own companies as part of the price. And again, it comes back to like what's incentivization, because if you're a founder, you've received a load of these shares in this company, but that stock price is just in the last year, it's kind of gone off a cliff a bit. Again, how incentivized are you still at that stage? And so there's definitely a lot to think about.
Brilliant, thank you. So we've completed our life cycle, and we said we'd leave some time for questions. So just before I do that, just if there's anything else you guys wanted to cover that you feel you've got a burning issue that you haven't done, now's your chance.
We haven't mentioned specifically EMI, share options. Worth looking into if you're a UK company, giving employees a potential upside in the case of any kind of exit event. So it's fairly straightforward to get into place. Doesn't cost you a huge amount apart from some legal costs up front. But if you do end up selling the company, then all of your employees potentially could share in the upside of that. So, yeah.
And the great thing about that as well is we know, anyone who has ever bumped across this industry knows that retention, resourcing is a challenge, right? And that's a really good way of giving someone that idea that you're part of something, and it comes back to your culture point. We want our employees to benefit. So I think that's a brilliant point.
Yeah, I guess the two takeaways from me, which is one, prevention is better than cure. It sounds so cliche, but each of these kind of stages we've talked about in this life cycle, you can make them so much smoother if you're ahead of the game and you're preempting what's coming next. And there's a wealth of advice out there. And the second point, which are connected, is when you do speak to external advisors or support, get some external resource, try and make sure that they know and actually really understand what the games industry is about, because again, it's so niche actually when you dig under the hood, and making sure you get someone who really gets the kind of what's market, what's not is really key. Brilliant.
So thank you ever so much, because I found that really interesting. Even though we rehearsed it, we talked about some stuff we hadn't spoken about before, so that was brilliant. As I said, we talked today about real two-person startup going right the way through, but these principles are applicable all over the place. If you're in one of those bigger studios, you'll find that actually the ideas are still a few people, and yes, you might not be going for external finance, but you might be talking to your finance team, so you might be sat opposite Neil saying, I really want some funding for this, have I got the budget? So all of those things, wherever you are, will still be relevant in my mind. And so, as I said at the very outset, will be around if you think, well, there was something that was interesting there, but doesn't quite sit with what I do, by all means come and talk to us. Be delighted to. I speak for you guys, but...
Absolutely.
Yeah, sure. I'll be around for a few hours, yeah.